Viewers, we discuss about journal. We define journal and also how we prepare a journal entries in any accounting systems. Accounting journal is a detailed account of all financial transaction of a business. It's also known as a book of original entry as it's the first place where transactions are recorded. While the entries in an accounting journal are used to create a journal ledger, which is then used to create a financial statements of a business. And before computerized bookkeeping and accounting, the transactions were entered manually into the journal and then posted to the journal ledger. And journal means it is a list of chronological order of all the transactions for the business. It is a book of original entry. And the format of journal is first we write down the date in first column, then in second column particulars. Particulars means the details which we sell the products or we receive from other organization or institutions. All the selling and purchasing are entered in the particulars. Then voucher number, ledger folio, and debit and credits columns are given in the format of journal. How we recording the transaction in the journal? In journalizing, it is the process of entering transaction into the journal. Journalizing means it's a process of entering the transaction in the journal. And in journal entry, an analysis of the effects of all a transaction on the accounts usually accompanied by an explanation of the transactions. This analysis identifies the account to be debited and credited in journal entry. And the types of journal entries are simple entry and compound entry. In simple entry, an entry for the transaction that affects only two accounts is a simple entry. And in compound entry, the entry where the transaction that affects more than two accounts is a compound entry. Remember that debits and credit must always be equal in journal entries. While in journal entry, we discuss in journal entry which includes date of the transaction, title of the account debited, title of the account credited, amount of debit and credit, and description of the transaction, which is narration, are also given in the journal entry. And the steps which involved in journalizing is first one step is identify transaction from source document and specify accounts affected. And the third one condition is apply debit or credit rules to determine which accounts are to be debited and those to be credited. And the fourth one and last one step which involved in journalizing is record transaction with description. How to record transaction in a journal? It means enter date in the first column like date column, and the second one thing in a particular column enter the name of the account debited. At extreme left of the column and abbreviation like DR is used for debit at right end of particular columns. And the third one condition is to record transaction in the journal is right amount in debit column. And the fourth one condition is in particulars columns enter the title of account to be credited indented to right preceded by the word to and right amount in credit column. We need to write to. If we don't write to, it's also accepted. But insert a narration which is a brief description of the transaction are given in the record of transaction in the journal. And draw a line across particular column is also record in the journal transactions. While in journalizing, like in this presentation, on April 1, Gage invested Rs 30,000 in Gillen Travel, where journal entry made for this step or this journalized entry is date. First one we write down the date, then particulars like cash account debit to Gage capital credit, and the narration is received initial investment from owner, and the debit amount with debit with the amount of 30,000 and credit with the amount of 30,000. Hope that you got an answer about journalize and how we journalizing the transaction.